And that short would be on this bar right here. I'll keep the pencil thin. You can see that we get immediate selling on both of these. And this is the feedback that I like when I'm in a trade. Okay, I'm in it. I've taken the setup and stuff. Can I get volume to go with the trade? And you can see right here that you got a lot of volume to go with the trade. And then right here on the low on this doji, the volume dries up. They've gotten stops beneath the day session low. I mean the Y through A period low. We get a doji, and when you take out that doji, bar's high, bang, it's off to the races. So it's a good chart to use to keep you with the pulse of the market. And whether you choose to use it, if you're a shorter term trader, I think it would probably pay you not to do the 50 lot filter. If you're more of a range trader and you're trying to get more out of your trades, then I think it would pay you to do the 50 lot filter, and that's pretty much up to you. One way that you could split this information is that you could look at the entire market on this chart and keep your 50 lot trader on the F3 or the F4 chart. So big picture stuff. What side of the market should you be trading? Not be afraid to take. We go to the F1 and the F2 screen. Now listen, we've gone to the well twice out of our areas on the short side of the market. You should have made your business plan handily by now. But you can see on this screen, on this look right here, you're looking at a P. Volume is below the overnight. Volume is below the 11.6 date and below the 11.5 days. So we're developing volume lower, but we're dealing with a P, and they managed to get stops below the Z period low. So if they take out this B area right here, then we've got a shot at that 49.50, 51.50. Best resistance is up here in this 55 to 63 area, these single prints. What would cause this market to rally today? Well, it won't be fundamentals. It's just the fact they couldn't break it in short covering. And this market can rally 30 to 40 handles on short covering. No other reason. And that's why you love it as a day trader, and that's why you hate it as a position trader. So, looking at this screen, we've got compression on this bar. You can see that the mode does not move lower. We do have selling, but starting right here on this bar, the selling stops, and then as it rallies, when we take out this bar's high, it's off to the races. Now, what setup would allow you to comfortably take this trade? I mean, how's your mind thinking right here? We got this low over here at 37. What do you expect as a trader in this situation as we get close to 37? Yeah, they're going to run stops beneath the overnight session high. So we expect them to get down to 37, and how many, 2, 4, maybe 5 ticks beneath it. You never know on this contract. But when we get this second test right here, the second piece of information is the 50 lot player. He's been fading this move for the most part. He did join the selling down to this point right here for sure. Then we have the level We're in that 35 to 37 where we saw support early this morning and where we wanted to be a buyer. And I gave you a little room, 35.50 to 37.50. The first low is 37, so we're into the level. And our idea kicks in. It's okay to be a buyer right there. So we have stops below 37. The 50 lot player's been fading the selling. We can watch that. We have a level that offers us an advantage, 35 to 37, and the idea was it's okay to buy down here. So how do you put that trade on? You put a buy stop in there and you're long at 37, 75, 38, and your first stop is where? The mean green line. And so where would you take yourself out of that trade if you thought we could get past this level right here? You take yourself out a tick inside of that one, so you'd be out of it at 12.45, allowing the locals to get stops above 12.45, a round number. So, I mean, there's just a lot of stuff that comes together if you think about it. And now, on the other hand, if you're a novice and a new trader, is oh my God, we just made new lows. And this guy, you know, and we're supposed to get long down here. I think I'm going to wait for a retest of that level. And that's okay too. That's you. But I mean, if you just think about what's going on, you can build a pretty pervasive case for getting long in that 37.50, 38 area, I think. But we got to change that thinking. We got to take, you got to see opportunity. You've got to think in terms, I can make money off of this, as opposed to what if I'm wrong? What if this doesn't work for me? What if I have another loser? I don't like to lose. Nobody likes to lose. I mean, it's like in boxing. Nobody likes to get hit in the head. I mean, it's a given fact. And really, really good boxers are very, very difficult to hit in the head. I got to spar yesterday with our #1 boxer in the club, and I don't think I got a glove. I may have touched him once or twice on a jab. I don't think I got a glove on him that whole minute as he just bounced around and bobbed and weaved, and I'm trying to cut him off and the rest of it. So you've got to think in terms of opportunity. You're here to make money. You take these setups and the rest of it. You gotta not think in terms of losing money or the rest of it. What I've noticed as I've grown a little bit in boxing is that a good offense is the best defense in boxing. And so I'm worried about not getting hit. And my opponent is thinking only in terms, where's an opening where I can hit this guy? And you need to adopt that kind of thinking. Where's the opportunity where I can make some money? And if you take good trades off of good setups, you're going to have yourself a pretty handsome bottom line. Yes, you can lose money doing this. Yes, you will not be right on every one of your trades. A couple of three of the new guys who had a bottom line as traders are finding they're right 3 out of 4 times. That's a little better than what we would expect 2 out of 3 times. And at 3 out of 4 means that if they're average net winner, I mean, it actually, that doubles your bottom line. You can be right 3 out of 4 with our setups. Okay, we have a B, no doubt about it. We said best resistance this morning was 28 to the buck. We said we expected back and forth. Why? Because of the 10-year auction. And very rarely will they take the market one way the whole time. I mean, they got to move it back and forth to entice the buyers. They know where the when issued market is, and they'll get the offers almost to that, and then they'll take them away. That way they hope the offers come up. I mean, I'm a large institution, I got to buy. And the worst that'll happen to me is I'll buy on the auction. Maybe I can buy it a little better in the when issued market. So if we put all these together, we're definitely dealing with a P. We had pretty good buying out of London. So we had hoped this morning to buy, come back in and get a retest of that and hold. We had a shot at getting in at 17s, but really, I mean, the best you could have bought it this morning was 19.5. So our buy zone was 17 to 21 to retest the overnight session high at that point. And then we blew out with weakness in the E-mini and B period. We were able to get up and through it, but where we thought we would have best resistance, 28 to the buck, held. Okay, so modifying Greg Young's news trade, where you don't get to follow through buying or selling. You put your pointer on the pane number 3, Michael, and I'll show you how to do it on this one. Won't be on the E-mini though. So you left click on pane number 3 where I have the cursor, so I left click on it, then I right click, and I go to chart indicators. Then I left click on volume study. You with me? And where it's, the parameters is highlighted in blue, I'm going to left click on parameters. And where it says lower lot size, change that from 1 to 50. Bill Thomas, who's a very, very effective trader who probably only has one losing day a month, very, very disciplined, says that lower lot size should not be 50, it should be 1. Bill Thomas will come in a couple times a week and share his methodologies and setups with everybody and go through how he does it. But Bill is an extremely disciplined trader. He's carved out his niche in the market. He and JB banter regularly in the room about the money left on the table if you'd been smart enough to take the trade. And okay, I'm on the pane number 3. This is the cumulative buy sell. On the pane number 2, it's a 1 lot. I mean, you're just looking for the delta inside that particular bar, so I don't touch the number 2 chart. The number 2 chart is our fastest read, and you want to, when you're in that one, that's where you get that immediate confirmation in a red or a blue bar that you get your trade potentially has legs. Okay, so the Greg Young trade, 28 to the buck, is our best resistance. And I've got a balance bar. And balance bars have squares on both sides of them. And the mode did not move higher, so I can sell stop into that trade, and I'm short at 29 and a half. And why is this like Greg's Newsday trade? Well, we have a barrier right out there, 28 to the buck, 131's pretty. I mean, somebody's going to take profits at 131. Come on. So when I break this bar's low right there, I mean, why not get short? And we're going to go back and retest 25, 26. And did we? Yes. We got through it. So come back up. We're at the value area high. We've got a diamond and a square. You can take the trade at the value area high right here on this skinny bar. You could put that one in, or if you break this bar's low right there, you're short at 24.5 and the market trades back to the mean green line. Well, duh. Where do we expect it to trade? To the mean green line. Now, all that is tempered by that number right there. These guys are still on the long side. And you can't forget that. Without these guys going with you, this trade is not going to develop. And why is the 50 lot player and so important on the note? That's 75% of the volume comes into this market on 50 lots. They don't disguise it. They don't feed it in one lot at a time. They don't iceberg order entry on this thing. They say, I'm long or short right here. Prove me wrong. So it's a different mindset in this market. But this morning we want to get long at 17s to 21s. You had this much time to enter the market at 21. And if you'd stuck with a trade, you could have gotten out at 31 for 10-30 seconds or $312 per position. That's a great trade on this contract, by the way. So the E-mini is trying to trade higher. My guess is we may have our shot at our 49.50 to 51.50. Better yet, maybe 55 to 57. We'll see if that happens. Any questions on what I've just talked about, or how you could have taken the trades, or how it was done? Now listen, I know it all sounds perfectly logical when I get through with it and the rest of it, but you need to start putting together these pieces of information. Get you 3 or 4 things that say, you know, if this area, this level holds as support or resistance, I can get long or short here, and then take the trade to see what happens. Any questions? Well, you can PM them to me or put them into the room. We'll see if we can't get them answered for you, okay? You should have made your business plan by now. And if you're new, you should be going to sim trading by now. And if you're a veteran, seasoned, gnarly old trader, you can be out here pounding that ATM some more. With that said, I'll be quiet.